I'm real estate economist Matthew Gardner, and welcome to this, the final episode of Mind the Housing Market for 2025. In this episode, I'm going to be sharing, unsurprisingly, my forecast for 2026 and what I expect to see in the US housing market. So, without further ado, let's get straight to the numbers. 2025 disappointed, with sales not rising above 2024 levels. But what does 2026 hold in store? Well, next year is actually shaping up to be one that will certainly be better than 2025, with my forecast calling for sales to rise by about 7%. That means we can expect to see roughly 4.4 million units trading hands. And sales growth will be driven in several ways. Not only will there be more choice in the market, with inventory levels rising, but I expect sellers to become more realistic regarding the value of their homes. And as this can lead asking prices to moderate, well, I guarantee you one thing, buyers will be watching. I expect borrowing costs to soften just a little, and that's also going to boost the number of active buyers. And finally, well, those fence sitters. Now, these are people who've been waiting excitedly for the market to collapse. Well, they're going to come to the realization that their wishes are not going to be granted, and with no collapse in prices, they're going to get more serious about buying a home in 2026. Geographically, I expect some fairly significant variances, with sales picking up in the Northeast and in the more affordable Midwest markets, while the South and the West, I think they're going to turn positive after having seen sales fall year over year in 2025. Now, here's what other economists are saying. Although everyone expects sales to improve next year, well, you can see there's quite a variance, with growth rates ranging from below 2% all the way up to 14%. Now, I've got to say that with all due respect to my colleague Lawrence Young over at NAR, I simply can't see a 14% jump in 26, but I certainly appreciate his optimism. Looking now at sale prices, I expect we'll see them increase nationally, but as we saw in 2025, the pace is going to be remarkably tepid. Median prices should rise by about 3%, and that's going to be an improvement over 2025, but not by much. I also expect single-family price growth to again exceed that of their multifamily counterparts. And prices have room to grow for essentially the same reasons as sales: greater confidence in the market, modestly lower borrowing costs, and modestly improving affordability. Geographically, the Midwest is going to continue to outperform its counterparts. Expect very small gains in the South and also in the Northeast, while out West, where prices pulled back in 2025, I see them turning around. They're going to be positive. Not by much, but they will be positive in 2026. At a local level, some markets, mainly those seen in Florida and also in Texas, where prices are already down, I think many are actually going to fall a little bit more. However, they will certainly all see a bottom in 2026. Again, the National Association of Realtors are on the optimistic side, while on the other end of the spectrum, the Mortgage Bankers Association are looking for prices to fall nationally, albeit not by very much. Looking now at borrowing costs. I'm actually the only economist who can see rates starting with a 5 handle at some point before the end of the year. And they could actually get lower than that, but be careful what you might wish for, because if that does happen, it will very likely mean that we are either already in a recession or about to enter one. And the primary reason why I think that rates can drop from where they are today is that, although I don't see bond yields moving much, we have seen the spread between mortgage rates and treasuries tighten a little. And if that continues, well, it won't take much for rates to break below 6%. However, I still think that the terminal or long-term rate for a 30-year fixed-rate mortgage is going to hold somewhere in the high 5s to low 6s. As you can see, although other economists are not quite as optimistic, with no one seeing rates rise or fall too far from where they are today, but I would note that Compass, well, they've put out a pretty wide range. And finally, the new construction market. It's going to be more influential in 2026 than is normally the case. As you can see, I'm currently modeling sales to rise a lot because I think the new construction market is going to take away market share from their resale counterparts. And the principal reason for this is that builders are sat on a lot of standing inventory. In fact, the number of builder-owned homes that are ready to move into, it's at levels we haven't seen since 2009. And there are major implications because of this. With builders continuing to offer a lot of incentives, including rate buy-downs as well as lower absolute prices, they will draw buyers away from the resale market. Geographically, markets with the biggest inventory overhang will continue to be very competitive price-wise in order to lower their stock. Examples of this can be found in Austin, Texas, as well as in Tampa, Florida. Not many analysts provide their opinions regarding new home sales, but as you can see, those that did also expect solid growth in that sector. I think that my 2026 housing forecast offers a somewhat nuanced view of the market. Yes, I expect sales and prices to both notch just a little higher. However, challenges will continue with affordability, although it should improve a little, still being a big hurdle for first-time buyers when it comes to getting their feet on the first rung of the housing ladder. There's a lot more work to be done on that front, but I'll leave that topic for another time. There you have it. I hope you found my comments to be of some interest, and if you did, please subscribe to my videos, and you can do that by hitting the link below. Until we see each other again in the new year, do take care, and I'll be back again in 2026 to take on more topics that are of interest to real estate brokers and their clients. Happy holidays, everyone. Bye now.